Alright guys, welcome back to the channel. So today is Thursday, and today we're going to go over my strategy for Wednesday on scalping SPY for a profit. So as you guys know, the day before I took a loss. I actually did 3 trades and I lost on all of them. I just got crushed. So on Wednesday, I decided to do a different strategy. So the strategy was in and out real quick and do some scalping. So I'm going to go ahead now and take you guys through my process of actually scalping. So I do have a couple of rules set up for myself as far as scalping is concerned. I'll go ahead and just throw that up on the screen right now so you guys can see. But I actually have this taped up on the wall in front of me so I can remember to try my best to abide by the rules. All right, so the first rule is to establish a channel, and that pretty much is just a channel that I would trade within. The second rule is I want to trade near the high or near the low. So I never want to trade all the way at the bottom of the channel, meaning I never want to get in right at the bottom. If I'm betting a call, I want to get in like just as it starts to leave that area. And then I also want to exit before it gets to the top of the channel. Third rule is I am working with a maximum of 4 to 5 candle runs. That's it. In a choppy market, usually after that, things start to change. So I'm trying to get in, get 4 or 5 candles, and take profits. That's why it's called scalping. It's like you're just taking off the top. You're not going for any long runs. Number 4, I'm selling halfway into the final candle. What that means is when I'm on trading view and I'm looking at the actual candles, let's say I see the 5th candle being formed, I don't want to wait till it's finished. I sell like at the midway point just so that my order can execute properly and fast. You guys know when I show you guys like the receipts, you'll see when I'm day trading, sometimes I'll try to execute the order and it doesn't go through. That's because I'm trying to do it at the end of the candle going into another candle. So I try to do it midway so I could get execution, sell, and be out. Next up, I want to try and risk the maximum of $150 on each trade. I'm not saying that it always works, but that's the goal. So scalping works by taking smaller trades and doing multiple trades. The return that I'm looking for on each trade is anywhere from 10 to 30% profit. Ideally, it's usually going to be around, say, 20%, but anywhere from 10 to 30% is good because we're going to do a lot more trades than normal. Normally, I would do like 2 or 3 trades a day. We're probably going to double that. Total ROI, I'm looking for 7 to say 10% return on my money. If I get more, great. If not, 7 to 10% ROI is fine for me. Meaning, if I put up $700 and I only make $70, that's fine by me. We're working with a choppy market. You got to be in and out and move fast. So number 8, this does require more capital than usual. So let's say my normal working capital is about 400. I'm probably going to have to double that or a little bit higher because you're going to be doing smaller trades, but you're going to be doing more than normal trades to try and make up. So you're taking less profit, but you're trying to make it up with volume. And then we're only doing one trade at a time. So if we have one trade going, we want to make sure that trade is done before we jump into another one. We're not trying to run 2 trades at a time, one call, one put, or 2 different puts. We're not doing none of that. One at a time, in and out, and get it done. The last rule is number 10, always watch the screen. Watch it, because in a choppy market, you could get up for a cup of water, come back, and it's like, oh snap, where'd my profit go? Yeah, it's that quick. So now we're gonna go ahead and just take a look at some numbers. So I'm gonna go ahead and just throw that up on the screen. All right, so as you guys can see on the screen, it says ROI data for each trade, and I'll just break it down for you guys. So in total, I took 6 trades on Wednesday. So the first one you guys can see was a put. I bought in at 146 and I sold at 175. So the ROI on that was 19%, which is good. The second trade was also another put. I bought in at 104 and sold for 132. So that was a 26% ROI. And then number 3 was another put that was for 136. And then I sold for 168 for a 23% ROI. Then I have my first call, which I bought in at 141 and I sold at 103. So I actually took a loss on that one. So that was negative 26% ROI. Fifth call was a put. This one stepped outside the rules because I bought this one for 265, but the volume was just crazy, so I was really confident. And I ended up selling this one for 306, making 15% ROI. And the final one was another call. This one I bought for 63, and then I ended up selling for 84 for a 33% ROI. So all in all, if you guys look at the bottom of the screen, I took 6 trades, but I got 5 out of 6, meaning I hit on 5 out of 6, which gave me an 84% win rate for the day. So now we're going to go ahead and hop into the chart, and I'll try to give you guys an idea of what went on. The thing is, because I was doing so many trades, I really didn't take the time to like go through and like mark the areas, but I'll give you guys a general idea of what I did, and pretty much, try to like move you around the area so you get an idea of what went on. So as you guys could see here, I have the play pulled up in trading view. I'll go ahead and zoom in just so I could show you guys what was going on. On this section here, if you guys look, you'll see I plotted out the first one here. So I bought for 146, and this was a put. So I got in right around this area here, and then I ended up selling down here. So it went from here, boom, 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 down to here, and I sold pretty much at the midpoint of this candle. So from here to here, I went from 146 to 175. I have another entry here, but after that, I stopped kind of like, noting it because it was just too much. The general idea, like I said, guys, is to try and get in. Because I'm playing puts, I'm trying to get in like right around here at this midpoint and then play it down, and then, like I said, exit right around like the half point of this candle before it hits the bottom. Because what I'm trying to avoid is I want to catch it here when it's running halfway from here down to here. I don't want it to get all the way down to the bottom of the channel, because then it could turn to a green candle and start going up. Soon as I got out, we had a green candle form. It started to go up, so the put would have been going down. So that's pretty much what scalping is. This strategy, it's for me, it's not the best strategy. It's not really time consuming too, because you're moving fast. I did most of this, I would say, within like an hour 15 minutes. So, but it is kind of stressful. You have to be like laser focused. You can't make any mistakes. The slightest mistake you could lose, because like I said, you're dealing with a choppy market. So pretty much using this channel as an example, if I were to say, let's say I'm playing a call, I'm trying to get in somewhere around like here, let it go up, boom, 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 and then get out just before it touches. You're playing puts, same concept. What we're going to do now is we're going to go ahead and just hop into Robinhood so I can show you guys the receipts, and then we'll go over the numbers. As you guys can see, we have SPY pulled up. I'll put it to the weekly so you guys can take a look at yesterday. But yesterday was the 17th. All right. So we started here at 5 a.m. Boom, boom, boom. 5:05. 10 a.m. was still 5:05, and then from 10 it just started going downwards. So this pretty much was the area that I'm playing. So I would say from like around here all the way down to here, because as you guys see, we were mostly playing puts. So I was just trying to capitalize on, this little slide here, the momentum of that, and then, playing it safe, trying to get out. We did play a couple of calls, only 2. out of 6 trades, we only did 2 calls. One worked out, the other one didn't work out. And then that, like I said, primarily happens because, I'm trying to go against the trend, which is, it's a little bit more difficult. It's easier to go with the trend. So if the stock is going down, then play your puts. If you do see little spikes, because stocks, they go up, they come back down. You could try to scalp going up, but more likely you're gonna have better luck with playing it with the trend. As you can see, all the puts I took yesterday hit. I took 2 calls, 1 hit, 1 miss. So, puts is the name of the game right now, especially with what's going on. So let's go ahead now and take a look at the receipts. All right, so here we go. So this was the actual first put that I tried, which was the 504 put, 417. It didn't execute, so I ended up canceling it, and then I went ahead and put it through here. So we have SPY 504 put, expiration is the same day, so this is ODTE. So 417 expiration, same day. I bought 1 contract for $1.46. Then we ended up selling back that same contract here for 175. So on this play, I made 19% ROI on that first one. And we go up here, we try to execute the 503 put. This one again was canceled. Then we were successful at executing it here, so we got in at 104. And then we end up selling this one, as you can see here, for 132. So we made 26% ROI on that play. And if we scroll back up, here we go again, trying to play the same 503 put. Canceled, didn't go through. And we finally got a hit here. 503 put, we got in for 136. And then if you look, got in for 136. We end up selling it for 168. So that one we made 23% ROI. And then the next one was a SPY call, 502 call, same day expiration. We got in for 141, and this was the one that I lost on. It started going sideways, so I was trying to get into another put. This one got canceled, and then we got into another put up here, which was the 265 put. All right, so this is 503, but this time I got it for 265. So if you guys will notice, the same 503 put, I was hitting on it, but also notice the price keeps going up. Now, some of these I could have left it to run, but because, like I said, I'm being cautious, I just wanted to be in and out to be on the safe side. At the end of the day, what I'm trying to focus on is just protecting my capital, my working capital. All right, I'm not trying to lose anything or minimize, my losses as much as possible. That's really what I'm trying to do. So we got in on this one here, the same 503 put for 265, and we end up selling it for 306. So that one again was a profit. That was a 15% ROI on that one. Then we have a SPY call here. Tried to sell the call, it got canceled. Wasn't being filled. Didn't catch the candle right at the halfway point. Then it started to go down. Sold again, and boom, we end up selling the call for 103. So this is the call that we bought for 141. We end up selling for 103. So we lost about $38 on that, or a negative ROI of 26%. So negative 26% ROI on that one. And we go up again, and then we have the final one, which was another call. So we got a breakout by this time. So we got in a small position. We got 1 contract, right? 504 call for 63, and we end up selling this one for 84. So on this one, we had an ROI of 33%. So actually, this one had the the best ROI out of all of them. So I'll put the full numbers up on the screen right now just so you guys can see. But in terms of working capital, I end up buying $855 worth of options, and then I end up selling for $968. So my total profit for the day was $113 or 13% ROI. So 13% ROI for scalping, for me, it's actually good. It's above, the 3% above the 10% minimum that I require. So it was actually good. But like I showed you guys, you're putting up a lot more capital to make not as much money. So this is, it's not actually my favorite strategy. I will tell you this though, in a choppy market, this is probably one of the safest strategies. As you guys can see, I played 6 options. I only lost on 1. Everything else hit because, you're not making it ride out for, a very long time. So once it starts to go up and you're watching the chart, the minute you see a candle forming that you don't like, you get out of the trade. You get out of the trade. You have a bullish, let's say, in this case, I was playing puts. So I have a huge David Banner candle. I have another one that's 2, one more comes 3. Once it gets to like 4, or halfway there, I'm looking to get out. You're moving in and out. So you don't make as much profit overall, but it's actually more secure, and you're also not risking as much capital. As you see, most of these trades that I did, out of the 6 trades, most of them were under, I would say all of them except one were under $150 per trade. Whereas normally I would start out my day trading for like about $250 to $300 on my first play. So you're risking less, and yes, you're not making as much, but it's definitely more secure. This, however, does require a lot more capital, as you guys can see. In this particular case, these 6 calls cost me $855. Well, 6 options, I should say, cost $855, which is about double what I would normally put up. Normally, I'd put up about $400 as my working capital, and then, most times I would get on average about say 40-50% return on that $400. So in this case, I put up 855 and I only made 10%, on average if you're scalping. In this case, I got lucky. I made 13% on my 855. So like I said, this is not the ideal strategy, but if you're looking to control your risk and keep your account safe, protecting your capital, which is your job. That's one of the biggest things for a trader, is protecting your capital. Without your capital, you can't work. That's like your tool. You understand what I'm saying? So you want to try and protect it. So I will tend to revert to this strategy in choppy markets. And a choppy market just means that, you rarely have any kind of bullish or bearish breakouts. The moves are usually very small. So it's just like, it's like going up the stairs. It's like up, up, down, down, up, up, down. It's very choppy, So you could play this strategy if you think you can handle it, or you could just sit it out and wait until, you find something that has momentum. Scalping does work and it is effective. You don't make as much profits, like I said, but it's a great way to manage risk and ensure that you do get profits and remain profitable. The downside is you require more capital and it does take a lot of attention. So if that's something that you can handle, then, scalping is for you, I guess. All right. Thanks so much for watching the channel today, guys. I hope you found the information useful. If you do, please consider subscribing. Also, don't forget to like the video and share this video with a family member or friend. Thanks again for watching. Y'all have a blessed day. Peace.